You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Tuesday, the 20th of February. Why Tuesday? Because the market is closed for President's Day on Monday. If you were thinking you were going to get to trade, you're wrong. But let's talk about what went on in the prior week and what we can expect to happen over the course of the next week as far as trend following goes. Before we jump there, let's talk about the Bitcoin training that we have. We are putting it out on the comprehensive review and forecast. It will be linked there in the email for all of our subscribers. If you are not a subscriber, you'll have one more chance. Go ahead and subscribe. Go to chartingwealth.com, put in your name, your email address, and we will send you on the Tuesday broadcast, the one that we record that day for Wednesday the 21st. We'll also send the link for the Bitcoin training along with the Bitcoin chart that we created that uses the Truth Strength Index. And you can follow along and see how wonderful that chart actually works. It is a great chart. We're very proud and happy with it. So again, want to share that training with you. Those of you who are subscribers, it will be in your notes. It'll be in the email that you get with the comprehensive review and forecast. And again, those of you who aren't subscribers, become a subscriber and you'll get it in the Wednesday daily market review that we'll record Tuesday night. Okay, folks, let's jump in and see what we see. What we see on the screen right now, those of you listening via iTunes audio, I just will tell you what we see. We can look back over the course of many months and we can see nothing like the red down candle where we had the weekly vertical crossover going down back on the week ending the 9th of February. No candle of that magnitude. Just don't see it. We're going all the way back to when we recorded our last quarterly purple. And in fact, that is a reminder, at the end of March, we will be having another quarterly review for those of you interested in long term where the S&P is. And those of you who continue to follow that with us, you know how accurate that quarterly chart is. It's unbelievable. We'll talk about more of that as we get closer. So what do we see going on this week? Okay, prior week ending the 9th, big red down candle. Now, the week ending the 16th, February the 16th, is a green solid block up candle, long wick on the bottom, shorter wick on top. All of the movement of the green solid body is well within the bounds of the red down candlestick. Even the wick on top is well within that strong down movement. Now, what does it mean for us? Well, it's like having a house and somebody comes in with a sledgehammer and knocks almost all of your supports out. Your house is still standing, it's still there, but very, very shaky. That's the analogy I gave yesterday. So the market is a bit squirrely. A lot of people are concerned with that kind of drop. Derivative oscillator still way in the negative. Price percent oscillator not going at the same steep angle it was going down before, but still headed down. Market barely up on Friday, 0.05%. That was an up week, but just barely up on Friday. As we drill a little deeper into the two-day chart, what do we see? Two-day chart's heading up. It hasn't crossed over yet. We do have the first day of the latest two-day candle is a strong up candle. Now, again, the market wasn't up that much, but remember, we're using Heikin Ashi candlesticks, which shows average pace. It is calculated completely different than the high open, low close of a typical candlestick. That's why we use the Heikin Ashi, because it's so much more helpful, we feel, in helping you see the average pace of price change. You want to know more about Heikin Ashi, please go to our website, do the training there, or go to our YouTube channel. It is, I think we have 64,000 views on our Heikin Ashi training. So again, we want to share that with you. Please, please take that. You'll understand more and understand why we use it, and it's so helpful. We see the derivative oscillator losing downward momentum. Again, price percent oscillator moving up. Some big green open box candles so far for the first day of the latest two-day candle. But again, weak price movement, 0.05. We look at the 4-hour chart. We can see that the market bottomed on Friday afternoon, and then starting on this past Monday, moved up all day Monday, down a little bit Tuesday morning, really sliding sideways once it peaked on Monday until the end of the day, well, until actually Wednesday morning. Then started moving up Wednesday afternoon, Thursday, and Friday. Not moving up as much. In fact, the angle's not going up as much, and the derivative oscillators lost some of its upward momentum. What does that portend for the next week? We shall watch. We shall see if we have a ceiling on this thing, and if it rolls over and starts heading down, where we could be in the back of a major, we could be in the makings of a major pullback, which means the market's moving in the opposite direction of the 2-day and the weekly trend lines, which are down. Well, the weekly vertical crossover and the 2-day vertical crossover. So we'll wait and see. If indeed the market just continues to move up, 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 it'll eventually pull the 2-day over, and then the weekly will have other things happening. But it is shaky. People are concerned, and we shall see what we shall see, and we shall be ready for a potential down play if indeed we have the makings of that. That is a rolling over of the 4-hour chart, crossing over, going down. Back to the weekly. Now the Q's a little different. Q's down 0.45%, almost 0.5% on Friday. But when we look at the price percent oscillator, it's flat. It's not actually moving down anymore. It's just flat, going sideways. Again, we'll continue to watch that. We look at price movement. We have a long wick on the bottom and a long wick on top. A little bit longer, it looks like, on the bottom. But again, a spinning top means lots of indecision. Again, all the price movement in the solid green box, well within the red down candle on the prior weekly candle. Now, what do we see going on? Derivative oscillators gaining downward momentum. Price percent oscillators flat. As we get in a little deeper, look at the latest 2-day chart, we see that it is not moving up at the same angle it had been before. It was a faster up movement, still moving up a little bit. Derivative oscillator losing downward momentum. And again, lots of up movement on the first day of this latest 2-day candle. A big open green box candle, no wick on the bottom, and a little bit of a wick on top. And again, price recovery all the way up to where it started moving down on Friday the 16th. Well, I'm sorry, on Wednesday the 7th. Yeah, that didn't make sense. So we'll continue to keep an eye on things. And again, we're still in a confirmed down move on the 2-day, still in a confirmed down move on the weekly. As we look at the 4-hour chart, we see the red pullback in the afternoon, red open box in the afternoon, things topping out somewhere along on our Heikin-Ashi candlesticks at about 165.77. Derivative oscillator losing some of its upward momentum. Price percent oscillator not moving up at the same angle. So again, we're cautious. We'll watch. Pullback potentially underway. And if indeed we see a rotation over, we'll be ready to jump in on a down move on the Qs. Now again, I encourage those of you who don't understand what shorting is, or a short position, buying a put or buying an inverse fund, please go and check out our training, Inverse Funds, What to Do When Markets Crash. That is available at both the website, chartingwealth.com, and at our YouTube channel, Charting Wealth. It will help you understand what we're talking about, because if you're sophisticated, you can actually make money when the market's moving up, down, or even sideways. Now, let's go back from the let's go on from the Qs to TLT. What do we see going on there? TLT is, of course, 20-year bond. It was up for the day, 0.54%. Haven't seen a lot of up movement lately. We were warning about that. Had a confirmed crossover going down back on the 5th of January. Actually finished our 6th week of strong down movement on TLT. Again, this is a short position where you would either have purchased virtually a put or an inverse fund. The only problem with inverse funds on the 20-year bonds is they're not all that liquid. So when you buy in, you've got to make a good bit of money just to break even. So again, put's typically a better thing to do. Or if you're holding, the TLT, then you just get out, wait for it to go down, and buy it cheap, right? Put your money in the bank, in the virtual bank. Now, that's where we are. The weekly chart is down on the derivative oscillator and the price percent oscillator, still heading down strongly. We see on the 2-day chart, first day of the latest 2-day chart, things have gone flat. We actually have a green open box spinning top, which means, again, indecision, but up, decidedly up. Now, what we see there is the price percent oscillator's gone flat. Derivative oscillator is losing downward momentum. So that is a real caution sign. Price movement still well below the 2-day and the weekly. Okay, that makes us a little more calm, but still some caution signs. And in fact, if we redrew that 2-day signal line and updated it, or 2-day trend line and updated, it would actually give us a lot more concern because we've actually pushed through that, still well below the weekly. We'll see more when we get to the 4-hour chart. See what we see here? We've been talking about this. We had a crossover going up back on the morning of the 13th. Things have slid sideways for a while, but in the morning on Friday, popped up, and then the afternoon a little bit of a pullback. But again, we have, with our redrawn 2-day line, violated that, and we just have concerns as the derivative oscillator continues to gain upward energy, and the price percent oscillator is shooting up like it is. So again, watch things. If you've not had enough alarm bells go off to pull your trade from all that you've done so well in that downward trade, getting in somewhere, around 125, having it go all the way down to a low of something in the neighborhood of 117.47, something like that. That's beautiful over the course of just a few weeks. Okay, we're going to go from TLT with that warning and head to gold. Gold, of course, crossed over going up back on the 5th of January, the week ending then on a weekly vertical crossover. But of course, well, and what's happening now is we do see the price percent oscillator heading up, derivative oscillator continuing to lose energy. When we look at how the week turned out after a down week, the prior week ending the 9th of February, we see that we really have a green spinning top at this point. More of a wick on top than on the bottom, but again, just really a sideways slide as far as the Heikin Ashi candlesticks go. We look at the 2-day chart, we see that it is getting close to crossing over, going up. Hasn't. This is actually the 3rd day of strong up movement as far as the Heikin Ashi candlesticks go. Derivative oscillator losing downward momentum. Price percent oscillator is heading up. And of course, that's just the first day of the latest 2-day candle. As we look at the 4-hour chart, we can see our first red candle in quite a while. It's 4-hour chart, and we can see how the market is really peaked out all the way back on actually the afternoon where it hit its latest high of Wednesday, and it looks like it's losing that momentum. So those of you who are using that 4-hour chart to trade, because we really don't have a standard trade since the 2-day is down and the weekly is up as far as vertical crossovers go, the 4-hour chart is your only chart, and again, it can be a great total trading chart. Keep an eye on Monday. If gold rolls over and starts losing more energy, you may very well pull that 4-hour, excuse me, that 4-hour trade. But we don't, and I said Monday, I'm sorry, Tuesday. We don't have any idea how that market is going to open up on Tuesday morning. So if you've continued in gold on your virtual trade, keep a close eye on what things are doing, because of course you got in at a beautiful spot. What the worst you could have gotten in around 126.18, and this thing popped up to a high of 128.70, so about $2.50 over the course of 3 days. Not bad on that 4-hour chart. Folks, that's where we are as we end the day on Friday, and as we go into the following week. The market closed on Monday for President's Day, opening Tuesday morning, the 20th of February. Again, you want that special training that we have on Bitcoin. Please make sure you are a subscriber. If you are a subscriber, check out the email and the notes there, and you will see the links. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.